Hello traders! In this video I will introduce you to the head and shoulders and inverted head and shoulders strategy. I will show you when it is formed, how it is formed, when to enter a deal, where the take profit and stop loss are placed. I will literally try to show you a lot of examples of head and shoulders, and I will show you in which situations the strategy shapes most often so that we can make the best deals. Let's get started. Let's see what are the rules for head and shoulders and inverted head and shoulders. This is a trend reversing figure that is always formed by strong weekly resistance or supports, always at the end of the trend. This is very important, you have to remember it. Especially when we have a daily time frame and we have a very high level. That's where the head and shoulders are most often formed. You will need to look at the different time frames. If you are looking on a daily chart, you can go a chart down to 4 hour to see if a head and shoulders will be formed. Usually, strong weekly or monthly levels almost always form a head and shoulders or double top or double bottom, as we talked about in the previous videos. How the head and shoulders are formed? It is formed as follows. First, one shoulder is shaped as a top. Then, the head is shaped as a higher top that touches a strong level. Then a lower top is formed as a right shoulder. Here is the highest top that touches the weekly level. We have the first top that does not touch the level. A second top that forms the head and touches a strong weekly level and then forms the right top. A lower high is formed as a right shoulder. What does this dictate you? The upward movement continues, but when the right shoulder is formed, it means that buyers no longer have the strength to push the price up. It becomes almost the same bottom and a lower high than the previous one, which is the first signal of reversing the trend. Buyers no longer have the strength to push the price up, so the top is lower than the previous one. The bottom between the shoulders is called neckline. We connect these two bottoms between the tops with a line. There is such a figure to draw. If we trade on a MetaTrader and not draw in TradingView, we just draw a trend line from the first bottom to the second and draw it little longer. When the price breaks the trend line, or as we already call it neckline, and closes a candle below, then is our entry in a short deal. It is important that the shoulders are not equal or higher than the head. The head and shoulders that are given in this figure are almost perfect. But sometimes you will have very high shoulders or tops. The important thing with the head and shoulders, whether it is normal or inverted head and shoulders, the shoulders should not be as big as the head. Or first, the left shoulder is formed up to the weekly level. The head is also up to the weekly level, and the right shoulder is also up to the weekly level. Then you will probably just have some side movement, but it will not be a head and shoulders. The requirement for the head and shoulders is that the shoulders are smaller than the head. 100% requirement. With many of the head and shoulders, you will notice that the left shoulder and the right shoulder are at the same level. They don't have to be on the same level. I just want to point it out as a fact. When we enter into deals, we already know how it is formed. A left shoulder is formed, a head that reaches the weekly level, and a right shoulder that is lower than the head. We already know what a neckline is. We know when a deal is entered. Our entry is when the price breaks the neckline and closes a candle under it, or above it if the head and shoulders are inverted. In this case, once we have a normal head and shoulders, we wait for a candle to close below the neckline. The line that connects the two bottoms, and when the price closes below it in whatever formation of candles, we enter into a short deal. You have to wait for the candle to close under the neckline. Then we set deals. Always wait for the candle to close. To determine the profit, we measure the distance from the neckline to the top of the head. Then apply the same distance from the neckline down. This would be our first take profit. What do we mean? Look, we have drawn an arrow to measure the top, the last tail, the highest top of the head to the neckline. Take this arrow and apply it from the neckline down. There will be situations in which the candle will close a little lower. There you enter a deal. But you measure the profit from neckline, not where you enter the deal. Exactly from the breakthrough of the neckline. You take this arrow, apply it here and see how far your full take profit should be. Always look to the left for previous strong levels, for previous tops and bottoms. And if you see that your profit matches the previous tops or bottoms, make the profit at least a few pips smaller. Because sometimes the spread may not hit your profit. This is extremely important. The stop is placed 10 pips over the right shoulder or the last top or bottom. As we entered into a deal here after this candle closed under the neckline. We placed 10 pips over the right shoulder, above the top, which formed like a right shoulder. Always count over the tails. 10 pips over the last tail of the right shoulder. Thus, head and shoulders trades usually become risk reward 1 to 2.5. The head and shoulders strategy gives extremely high success rate, over 90%. However, it is a trend reversal strategy. You have to keep in mind that if all of the rules that we talked about here are not in place, you should not enter a deal, because after all, this is a deal that is launched against the trend. The idea of head and shoulders is to catch the reversal of the trend. That is why we must follow all of the rules. Let's repeat them again. First, the left shoulder is formed. If we look only so far, the price is doing absolutely nothing interesting. Then, there is a second movement and a large top that already touches a strong level. From here, you need to be vigilant about whether it will take shape. Whether the price will adjust and shape the right shoulder. Because usually, the right shoulder takes shape quickly, a neckline breakthrough occurs and the price goes and reaches take profit. So keep all these things in place. Enter a deal after you have a candle closed under the neckline. Stop is placed 10 pips over the last stop and take profit by measuring from the head to the neckline and apply the distance from the neckline down. You collect the profit twice. Be sure to comply with previous highs and lows. They are an integral part of our trade. So that is why first we learned how to draw and then we learn how to make deals. Here's the result of the deal. Let me show you inverted head and shoulders. It's literally like watching a man upside down. First, left shoulder is formed as bottom, the head as a lower bottom and right shoulder as higher bottom of the head. And when you draw the graph, a head and shoulders are formed. I want to see how the candle closes here long after the breakout, but we have to wait for the closure and then enter deals. It is extremely important. Again, we put a stop 10 pips under the last tail. We measure the distance from the bottom to the neckline or to the last stop. We apply the arrow from the neckline upwards, where the breakout took place, not where the candle closed, in order to measure our profit. We again collect the profit twice. I repeat everything several times so that you can remember it and not make mistakes. And here's the development of the deal. Years ago, there was always test of the neckline after breakout, but nowadays you don't see a test many times. I would even say that there is rarely a test for the head and shoulders. Let me show you a few more deals that we have launched before. Okay, let's see an example of head and shoulders. This is on a daily chart. First, we have a huge upward movement. As we said, we are on a daily chart, so this is a very long time period. Then, let's look at the end of it. We have a top and a bottom. Then a second top, a price makes a huge impulse, which touches a strong daily level. Then made a correction, forming a bottom that is equal to the previous one. So, we are waiting to see if the third top is going to be lower than the previous one. That will tell us that maybe the buyers don't have enough strength anymore and maybe the sellers will take prevail. So, let's see. here we can see that this top is formed as lower than the previous one. So we go to gadgets and choose head and shoulders pattern. We start to draw from the beginning of the impulse that formed our left shoulder, down to the first bottom, then to the highest part of the impulse that touches the strong level that formed our head, then the second bottom, and the third top, which must be lower than the previous one. It looks just like a head and shoulders, that's why it's called this way. Now we are waiting for a breakthrough and a candle to close under our neckline. This plays a role as a neckline. We can seek for a better entry on a lower time frame. We go on 4-hour chart. We are waiting. Here, this is not our entry point because if we zoom in, only the tail touches the neckline. So we are wait, and this candle here is our entry point. We're gonna set a short position here. Now we're gonna adjust the take profit and the stop loss on a daily chart again. Our stop loss 10 pips above the right shoulder, 300, let's make it on 34 pips. Let me adjust it a little bit. Yes, 340 pips. For the take profit, we're gonna measure the distance from the highest part of the head down to the neckline and apply it from the breakthrough downwards. Not from where the candle closes, but from the breakthrough. We can see this is going to be our take profit. As we already said, we always comply with previous strong levels, tops and bottoms. So here we have a huge tail. Before that we have two bottoms. So we're gonna collect half of the profits here on this daily level. You can see it matches with the daily level. So we're gonna collect half of the profits here. And you can see here the price reaches our first take profit. We're gonna protect the deal by moving the stop on profit and extend our next take profit to the next previous bottom. Here. And our next second take profit is hit. After the head and shoulders, we have a huge fall of the price. That's why you must follow all the rules, because this trend reversing strategy gives a great success rate. Okay, here we're gonna see an example of head and shoulders. I use the replay function in advance so we can go through it step by step together. First, we have an uptrend. You can see here the price breaks a strong daily level. First, we have a top, a bottom, then a huge impulse that breaks a strong level of resistance, our daily level. Here we can apply other strategies, but we're gonna talk about them later in the course. For now, we are waiting for a correction to see what the price will do next. Here we can see that the price makes a bottom. Then we are waiting for a new impulse wave maybe. But we can see the price tests the daily level, forming a lower high than the previous one. So when we zoom out, you can see how the end of this uptrend is a huge impulse that breaks a strong level, then making a correction and making a smaller high, which tests the daily level again. This is our indicator that maybe the buyers don't have enough strength and the sellers will take prevail. So we go to patterns and choose the head and shoulder pattern. We started to draw from the beginning of the last impulse, which forms our left shoulder, to the first bottom, then to the end of the impulse as our head, and the first bottom after it. That marks the correction. And the third top, which must be lower than the previous one. And you can see how a head and shoulder pattern occurred. Now, this example is very good for two reasons. First, because, let me zoom out and let me erase it. You can see how it is hard to be noticed. You have to practice. You have to practice enough so you can foresee the movement of the price. And you can be prepared for the occur of this type of strategy, a trend reversing strategy. So first we have a huge upward movement, the price breaks a strong level, then forming a second top after the impulse, which is lower than the previous one. Let me return. And the second thing about this example is you can see how our head and shoulders here is tilted up. If it was tilted down, let me draw it like this. If it was like this, maybe, it's not good for trading. Let me make it this way. It's not good. Why? Because we are waiting for a breakthrough of the neckline. And if our breakthrough was here, our stop would be way bigger, and our profit, our entry in short position would be very late, because here you can see a correction is already formed, and our stop would be too big, and our profit would be smaller. Remember this. If you are looking for a short position, you are looking for sell, and the head and shoulders pattern is tilted down like this, it's not good for trading. You better wait to see what the price will do next. But in this case, this example is good. I'm gonna adjust it afterwards. Here, let me adjust it. Okay, it is tilted up, so now we are waiting for a breakthrough. And let's see. Here, we have a fake breakthrough. When we have a candle that closes only with the tail outside our neckline, it is considered a fake breakthrough. We must have a whole candle with the whole body that closes under our neckline. This is considered a fake breakthrough. Remember this. Then again, another fake breakthrough. We are still waiting. We are not entering a deal here. Most of the times these candles are manipulations. So you must wait. You have to be patient. Here we have another fake breakthrough. We are still waiting. You can see how the price started to move sideways. Here we can apply other strategies, but again we're gonna talk about them later. Here this candle breaks the neckline. We can go to 1 hour and seek for a better entry. Here is our entry in short position. Let me return some few candles back. This is our entry in short position. You can see how here the price closes with a very small part of it under our neckline. But this is not good entry. You have to have a good entry like this. This is a good breakthrough. So again, be patient. We have 1, 2 on smaller chart. 1, 2, 3, 4 fake breakthroughs. And then we have a real breakthrough that marks our entrance in short position. We're gonna adjust the stop loss and the take profit on a 4-hour chart. Stop loss 10 pips above the last repulsion, our right shoulder. 105 pips on the daily level. Our take profit, we're gonna measure the distance from the highest part of the head of the impulse to the neckline and apply it from the breakthrough downwards. Not from where the candle closes, not from where we enter the deal, but from the breakthrough. and we must comply with previous strong levels, previous tops and bottoms. Here we have a top, then two bottoms, so we're gonna comply with it and make our first take profit here or on the daily level. Let's see. You can see how literally the price fell and hit our take profit. Then we're gonna protect the deal by moving the stop on profit and extend our next take profit on the next strong level. Here we have tops, so we're gonna make it to here, or you can make it to the next daily level. Take profit 2. Let me extend it. And you can see how our second take profit is hit. Or if you make it to the daily level, you can see it is hit again. So again, we have a huge upward movement, then we have a top, a bottom, and a strong impulse that breaks a strong level, some strong level, daily, weekly, or monthly level. Then a third top which is lower than the previous one that breaks the strong level. This is our indicator that in this case the buyers don't have enough strength anymore and the sellers will take prevail. So we draw our head and shoulders pattern. It is good to be tilted up when you're looking for a sales, when you're looking for a short position. If it is tilted downwards, your entry would be late and your stop would be much higher. So avoid entering in those kind of deals. Measure the distance of the impulse down to the neckline, apply it from the breakthrough downwards, and always comply with previous strong levels, tops and bottoms. This is how a head and shoulders is traded. It is very successful strategies. It's formed from the highest or the lowest points of the price, from a strong daily, weekly, monthly levels. So you have to practice, draw on the chart, be patient, so you can foresee the things before they happen. Okay guys, now I'm going to show you some interesting examples of head and shoulders. I already draw everything for you on my chart here, so we can get through it step by step together. And I recommend you after that to go to your trading view and draw it by yourself, so you can see how things happen in real situation. You can use the replay function. It will be good for your practice. Okay, first, we have a huge downward movement. Here, the price reached a daily level, then breaks it and breaks a strong monthly level of support. Then we have a top and a third bottom, which is higher than the previous one. That tells us that the sellers don't have enough strength anymore and buyers will take prevail. Okay, but we draw our head and shoulders pattern. In this case, you can see how it is tilted up. We already talked about this in the previous video. When the head and shoulders pattern, in this situation, when we are looking for a long position, is tilted upwards, it's not good for trading. I'm gonna show you why. Because here we have a breakthrough and a candle that closes above our neckline, displays a row as a neckline. We set a long position here. Our stop would be 546. I'm not going to adjust it. Pips, you can see it's too big. The stop is too big. And our entrance is very late. That's why you have to avoid trading situations like this. If this tail here wasn't there and the head and shoulders was like this, it would be perfect. But we must comply with the tails, so it's not good. I recommend you to not trade situations like this. Just wait to see what the price will do. Next, as you can see, the price started to go downwards, then forming a bottom, a top, and a second bottom, as the end of this impulse, which touches the daily level, a strong level. Then forming a top and the third bottom, which is higher than the previous one. Again, this tells us that the sellers don't have enough strength, so we are drawing our head and shoulders pattern, and you can see it is tilted downwards, so this is perfect. We can look for a better entry on a lower time frame on a 1 hour chart, and we enter when we have a closed candle above the neckline, we enter a long position. Our stop loss 10 pips under the last shoulder, the right shoulder, and for the take profit, we're gonna comply with previous levels. You can see our first take profit on this top right here, and our second take profit, we look for the next strong level. Here it is. You can see how the price tests our neckline and then make a huge impulse upwards, breaking a daily level again, test the daily level, and the huge impulse that breaks a strong weekly level of resistance. Then the price return, forming a bottom and a third top, which is lower than the previous one. It is almost, I can say it is equal to the first one. This example here is almost perfect. You can see we have two small shoulders and one big head that breaks a strong weekly level of resistance. It is tilted upwards, perfect again. We can seek for a better entry on a lower time frame again on 1 hour chart. We enter a short position here, our stop, in this case 10 pips above the right shoulder, and our take profit. Again, we comply with previous strong levels. Of course, when I say we must comply with previous levels, we measure the distance of the impulse and apply it from the breakthrough downwards and look for strong levels around our take profit. Not, let's say here. You look for strong levels around our take profit. You can see how the price started to go down, then returns to test this daily level, and then falls to hit our second take profit. And if you can see here, the price perfectly touches this previous bottom and then never returns back. That's why we must comply with these levels. Of course, when our first take profit is hit and the previous deals too, we protect our deal by moving the stop on profit. So, no matter what happened, we will have a successful deal. That's really important. I know that I'm repeating it many times, but it is important, that's why. Then, what we have then? The price has started to go upwards. We have a new impulse wave. And then, you can see a top, a bottom, and a second top, which almost touches a strong level, 143, a round level. Then, forming a third top which is lower than the previous one. We draw our head and shoulders pattern. It is tilted upwards. It is perfect. We are waiting for a breakthrough. Here we have a fake breakthrough. We already know what fake breakthroughs are, so we just have to be patient, wait for the proper entry, and here it is. We are entering a short position here. Our stop 10 pips above the right shoulder. And for the take profit, we measure the distance of from the highest part of the head down to the neckline and apply it from the breakthrough downwards. And we again comply with previous strong levels. Here, this bottom for our first take profit. When the price hits our first take profit, we protect the deal. And then extend the second take profit down to the next bottoms. And this is it. This is how head and shoulders are traded. You must look at them when we are looking for a short position from the highest point of the price around some strong daily, weekly or monthly level. If we are looking for a long position on the lowest point of the price, again around strong daily, weekly or monthly level. If we are looking for a long position, it is good our head and shoulders to be straight or to be tilted downwards. If it is tilted upwards, it's not good. Our entry will be late and our stop would be much bigger. This is it. I recommend you now go to your trading view, draw these examples that I give you right now, and then start to look for another examples. You must practice to start to see everything on the chart, to know the rules perfectly, and to be a successful trader. Okay traders, now you already know how to trade head and shoulders and inverted head and shoulders. Now go to trading view and find at least 15-20 examples of the strategy. And now we are gonna move to the next strategies.